2008. The global financial system teetered on collapse. Banks crumbled, trust vanished, and the world questioned the very nature of money. Amidst chaos, a new idea emerged. What if finance could be different? In the shadows, a digital revolution was brewing. From the turmoil, a mysterious figure, Satoshi Nakamoto, introduced Bitcoin. This decentralized digital currency promised freedom from banks and governments. Bitcoin's radical vision sparked a movement. This is the story of how crypto began. On Halloween 2008, Satoshi released the Bitcoin white paper, a blueprint for peer-to-peer electronic cash. It proposed a decentralized network powered by blockchain, a public tamper-proof ledger. The idea ignited the imaginations of cypherpunks and tech enthusiasts. A financial revolution was set in motion. January 3, 2009. The Genesis block was mined, marking Bitcoin's birth. Embedded was a message. Chancellor on brink of second bailout for banks. Bitcoin became a digital protest against failing financial systems. Mining began, and the network came alive. Bitcoin's power lies in decentralization. No central authority, no borders. Transactions are transparent, accessible, and inclusive. Early adopters saw the potential to disrupt finance. A global movement was born. In the early days, Bitcoin was a niche experiment traded for pennies. Miners and believers formed a tight-knit community, driven by vision, not profit. The technology was clunky, but optimism thrived. They were pioneers at the dawn of a new era. May 2010. Laszlo Hanyecz bought 2 pizzas for 10,000 bitcoins. That transaction, now legendary, proved Bitcoin could be used in the real world. Today, those pizzas are worth millions. Bitcoin Pizza Day marks crypto's humble start. Early exchanges like Mt. Gox made buying and selling Bitcoin easier. These platforms fueled adoption but faced hacks and collapses. The need for better security and regulation became clear. Crypto's growing pains shaped its future. Bitcoin's success inspired a wave of altcoins, each with new ideas. Some improved speed, others targeted new markets, and some, like Dogecoin, just had fun. Blockchain's versatility became clear. The crypto ecosystem exploded with innovation and risk. In 2015, Ethereum arrived, introducing smart contracts and decentralized apps. Developers built new services on blockchain, from exchanges to digital art. Ethereum empowered a global community of creators. Decentralization's potential expanded beyond money. Ethereum enabled ICOs. Startups raised billions by selling tokens. Innovation soared, but scams and failures followed. The ICO boom revealed both the power and pitfalls of crowdfunding. Calls for regulation and investor protection grew louder. Bitcoin's price soared and crashed, creating millionaires and heartbreak. The 2017 bull run and 2018 crash defined crypto's volatility. Yet, each cycle brought resilience and renewed interest. Booms and busts became the rhythm of crypto's story. The volatile nature of the cryptocurrency market created a breeding ground for extraordinary wealth creation, minting a new generation of millionaires and billionaires, many of whom amassed their fortunes in the blink of an eye. These crypto nouveau riche, often with backgrounds far removed from traditional finance, became symbols of both the promise and the peril of this burgeoning industry. Some, like the Winklevoss twins, early Bitcoin investors who famously used a portion of their Facebook settlement to amass a significant Bitcoin holding, became vocal advocates for cryptocurrencies, using their wealth and influence to promote adoption and shape the regulatory landscape. Others, like Sam Bankman-Fried, the enigmatic founder of the now-defunct FTX exchange, rode the wave of the DeFi and NFT boom to amass billions, only to see their empires crumble amidst allegations of fraud and mismanagement. The stories of these crypto tycoons, both triumphant and tragic, captured the public imagination, fueling the allure of overnight riches and the mystique of this decentralized digital gold rush. Yet beyond the headlines and the Lamborghinis, a more nuanced picture emerged. Many early Bitcoin adopters who had held onto their holdings through the wild price swings found themselves sitting on life-changing wealth. Others, who had invested wisely in promising altcoin projects, reaped the rewards of their foresight. The rise of the crypto rich, while undoubtedly fueled in part by speculation and luck, also highlighted the transformative potential of blockchain technology to disrupt traditional wealth creation models. It empowered individuals, regardless of their background or connections, to participate in a global financial revolution, challenging the established order and redefining the meaning of wealth in the digital age. Section 3. Echoes of Collapse, Terra Luna and the Fall of FTX. In 2022, the crypto world was shaken by the collapse of Terra Luna and FTX, two giants that seemed invincible. Terra Luna's stablecoin unraveled, wiping out billions and triggering panic. Then, FTX, once a symbol of trust, collapsed amid scandal and alleged fraud. These events exposed the fragility of trust in crypto and the urgent need for transparency and oversight. Section 1. Governments enter the fray. The meteoric rise of cryptocurrencies, with their promise of disrupting the established financial order, did not go unnoticed by governments worldwide. As the industry matured and gained mainstream traction, regulators grappled with how to address this new asset class, their responses ranging from cautious embrace to outright hostility. Some countries, wary of the potential risks posed by decentralized, borderless currencies, opted for a heavy-handed approach. China, a country known for its tight control over its financial system, implemented a series of increasingly stringent measures, culminating in a blanket ban on cryptocurrency trading and mining in 2021. Other nations, such as India, explored similar restrictions, citing concerns about money laundering, tax evasion, and the potential for cryptocurrencies to undermine their national currencies. In contrast, other jurisdictions adopted a more progressive stance, recognizing the potential of blockchain technology and cryptocurrencies to foster innovation and economic growth. Switzerland, a global hub for traditional finance, emerged as a crypto-friendly jurisdiction, attracting blockchain startups and establishing a regulatory framework that fostered innovation while mitigating risks. Singapore, another financial powerhouse, adopted a similar approach, positioning itself as a regional hub for blockchain and cryptocurrency businesses. The United States, home to Silicon Valley and a hotbed of technological innovation, found itself grappling with a fragmented regulatory landscape. While various government agencies, including the Securities and Exchange Commission and the Commodity Futures Trading Commission, asserted their jurisdiction over different aspects of the crypto industry, a comprehensive regulatory framework remained elusive. This lack of clarity created uncertainty for businesses and investors alike, hindering innovation and stifling growth. Section 2. El Salvador's Bitcoin Gamble. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender, led by President Nayib Bukele. The move sparked excitement and skepticism, with supporters calling it revolutionary and critics warning of risks. Despite technical challenges and volatility, El Salvador's Bitcoin gamble has changed the global financial conversation. As the dust settled from the initial wave of cryptocurrency mania, a new frontier emerged, one that promised to revolutionize not just money itself, but the entire financial system. This brave new world, dubbed decentralized finance, or DeFi for short, sought to leverage the power of blockchain technology to create a parallel financial universe, one that was open, transparent, and accessible to all. Imagine a world where you could lend, borrow, and earn interest on your crypto assets without ever setting foot in a traditional bank. Imagine a world where complex financial instruments, once the exclusive domain of Wall Street, were accessible to anyone with an internet connection. This was the promise of DeFi. At the heart of this revolution lay the concept of decentralized applications, or dApps, built on open-source blockchain platforms like Ethereum. These dApps, powered by smart contracts, enabled a wide range of financial services from lending and borrowing platforms to decentralized exchanges and stablecoins, all operating without the need for intermediaries. The implications were profound. DeFi had the potential to democratize access to financial services, providing individuals, especially those underserved by traditional institutions, with new tools to manage their wealth and participate in the global economy. It also promised to increase transparency and efficiency in the financial system, reducing fees, streamlining processes, and fostering innovation. As DeFi transformed finance, blockchain sparked a revolution in digital art and ownership. NFTs turned digital creations into unique, tradable assets, empowering artists and collectors alike. NFTs introduced digital scarcity, paving the way for immersive virtual worlds and the rise of the metaverse, where digital and physical realities blend. The story of Bitcoin and cryptocurrency is far from finished. It's a narrative still being written, a digital tapestry woven with threads of innovation, speculation, triumph, and failure. From its humble beginnings as a fringe experiment, Bitcoin has evolved into a global phenomenon, capturing the imagination of millions and challenging the very foundations of the financial system. While the mainstream media often fixates on the volatile price swings and the occasional scandals, the true significance of crypto lies in its underlying principles: decentralization, transparency, and the democratization of financial power. These ideas, once confined to the fringes of the internet, have now permeated mainstream consciousness, forcing governments, institutions, and individuals to rethink their relationship with money and power. Crypto's enduring legacy lies not just in its technological innovations, but in its ability to inspire a global movement, a diverse community of individuals united by a shared belief in a more equitable and decentralized future. From the early Bitcoin evangelists who spread the word on online forums to the developers, entrepreneurs, and artists building the next generation of decentralized applications, the crypto community has consistently pushed the boundaries of what's possible, challenging the status quo and driving innovation at a breakneck pace. As we stand at this crossroads, the future of crypto remains uncertain, a kaleidoscope of possibilities both exhilarating and daunting. Will Bitcoin and other cryptocurrencies eventually become widely adopted forms of payment, seamlessly integrated into our daily lives? Will DeFi platforms upend traditional finance, empowering individuals and reshaping the global economic landscape? Will NFTs and the metaverse usher in a new era of digital ownership and experiences, blurring the lines between the physical and digital realms? Only time will tell what the future holds for this rapidly evolving industry. But one thing is certain: crypto has already left an indelible mark on the world, sparking a conversation about the nature of money, power, and the future of our digital lives. Whether you're a seasoned crypto enthusiast or a curious newcomer, there's no denying that the story of Bitcoin and cryptocurrency is a compelling one, a story that reflects our collective hopes, anxieties, and aspirations for a more equitable and decentralized future. Like any revolution, the path forward for crypto will be fraught with challenges, setbacks, and unexpected twists and turns. But amidst the volatility and uncertainty, one thing remains clear: the genie is out of the bottle. The ideas unleashed by Bitcoin and the broader crypto movement have taken root, and their impact will continue to reverberate across the globe for generations to come. The story isn't over, it's just beginning.